Welcome back, fellow value investors. In this video, I'm going to be covering a small cap company by the name of Pangaea Logistics. Pangaea handles dry bulk shipping of goods, and they also can get their vessels in frozen waters. It's a very small company, but it's been rewarding shareholders for years in the form of stock appreciation and really good dividends. They announced their earnings less than 2 weeks ago. I have a fresh set of financial statements that I could use to update my valuation of Pangaea and make a decision whether I should buy more shares, hold, or sell the shares that I own in PANL. Before I do so, please like my video, subscribe to my channel, and please provide comments on this company. I'll go through my process and I'll make that decision. Let's get into the video. Over the years, I've developed a process to invest in stocks. And first, it's all about the company. I look at the balance sheet and I look at the discount offered to a stock price. With regard to the company, I want to make a decision as if I was buying a fraction of this business. Do I like the business? Do I like the industry? And do I think the management team is doing a good job operating this business? The balance sheet. Is the balance sheet less than 3 times EBITDA? Debt is a huge liability for a business, especially now that interest rates are much higher. And then the discount on the stock. I'm a value investor and I want a good discount on a stock. My best game is when I buy a really good company that for whatever reason the stock market does not like at the given time. I buy at a really low price and then see it go up in price over time, and it rewards me with great appreciation. That's why I need that stock price discount. And based on the answers to those questions, I will buy, hold, or sell. So Pangaea really specializes in moving dry freight, and they also focus on certain routes. Some of these routes are very difficult to sail through, but they are very good at it. And that specialization has helped them keep first their demand up, since there's few alternatives to what they do. It also helped them get better rates from their customers. And that's really important in the shipping industry. Shipping rates have gone down significantly. So keeping revenues as high as possible is really important at this time. And the company has maintained their profitability, which is great. Their management team is really good. They really know this industry. They know the company. And I think they've been operating the business very well. Pangaea announced their earnings for the third quarter of 2023. And I'd like to review their earnings and their financial statements. First, their earnings per share was really positive. It actually surprised to the upside. So the stock really rallied on the news of their earnings. The cash flow was good, EBITDA was good, but I wanted to highlight that if you look at their shipping rates, they are operating at 49% above the average in the industry. And it goes back to that specialization and their decision to service certain routes. Since they are the only player doing so, I think they have pricing power when it comes to those routes and doing dry goods. So that's a really good idea, and it's a competitive advantage that the company is operating with. You can see that in the industry, rates have gone down. Even it's affecting this company as well. And rates have gone down so significantly that you're seeing revenues really drop from year to year. And I own Pangaea. I also own Zim Logistics, and it's really affecting Zim Logistics as well. One thing I wanted to highlight is this company over the last 5 years, it went from about a $373 million company up to 700, which is great growth. And this has really rewarded shareholders in two forms. One, just really high dividends. They've paid great dividends and stock appreciation. So you get the best of both worlds. Looking at their income statement, you can see that in the third quarter, revenue did go down from 184 down to 135 million. And that was a pretty good drop. And it's mainly shipping rates. I think their volumes were pretty much the same. There was about a 1% difference in shipping volumes. And year to date, as expected, they went down year to date, first 9 months of about, they went from 572 million in revenue down to 367 million. That again is understandable. Shipping rates are down, so it's not like the company is out there losing customers. It's just the shipping rates. The really good news is that they're profitable. It's very good to see a business when they have the discipline, the know-how, that especially in an industry where you're dependent on rates that are a market-driven factor, if they can maintain their profitability, I believe it's a sign of a strong business and a strong management team. Pangaea has a fair amount of cash. They have $87 million of cash on their balance sheet. They also hold, some prepayments, which is good to see. They have long-term debt. They have a combination of long-term debt, of long-term secured, long-term liabilities. And I'm going to use that to estimate their debt to EBITDA ratio and make sure it's below 3. Overall, I'm comfortable with their balance sheet. They also have long-term leases. They've used both their commitment to long-term leases as well as some of their debt to acquire more vessels. And those vessels enable them to have a greater volume of shipping. So that's all productive since they're making their business bigger and stronger and servicing their customers. So that's the reason they use their debt. So looking at the statement of cash flows did drop, and they dropped quite a bit compared to last year. They did generate free cash from operations, but they did put a lot of money back into the business in the form of purchase of vessels or vessel improvements. So they're just barely making free cash flow. And I'm not going to take the first 9 months and then annualize them, because I think that wouldn't represent the business. Instead, I'm going to take more of an average in my valuation of free cash flow that I expect, take a conservative average and use that to value the company based on free cash flows. The business has just really paid down and really used their cash, in a way to, I think, better their balance sheet. And that's why their free cash from operations is lower. And they've invested in the business, which really drove down the free cash flow number as well. I believe that Pangaea is currently sold at a fair price because they only offer about a 1% discount. I value companies based on free cash flows that I expect in the future. I also discount the earnings per share that I expect from the company in the future. Looking at free cash flows, I expect that a good average number is 40 million per year. Looking at the last 5 years and where I think the company operates in, I'm going to grow both long and short-term cash flows by 2%, which is very conservative. And I'm going to grow once year 1 through 4, and then set up a terminal value, which represents all the cash flows after year 4. I'm going to use a high weighted average cost of capital because it's a small company. It's also a shipping company. When I discount all those cash flows based on that at weighted average cost of capital, I get to 367 million, which is the value of all those free cash flows. I add the cash and take away the debt to get to an equity value of 333 million. The market cap of the company is 344 currently. So it's actually being sold at a premium of 3%. If you look at the free cash flows, earnings per share, I think that in the next 4 quarters, they're going to do about 85 cents. I'm going to put a PE of 12, nice conservative growth rate. And I'm going to discount all those earnings per share to get to a value per share of $8.08. And the stock's being sold at $7.40. So if you look at earnings per share, there's a discount of 9%. I go 2/3 on my weighting. I use 2/3 of the free cash flow method, 1/3 earnings per share, and the blended discount is 1% on Pangaea. Pangaea is a small cap, and you could see that small caps could have a lot of volatility. There's no perfect, upward trajectory on the stock. But year to date, it's up 43%. So just a real good winner. Over the last month, it's up 25%. So a real good winner. And so it's been an interesting company. I love volatility as a value investor because it gives me an opportunity to buy here, buy here, buy here. I have an advantage in small cap stocks because they're not covered by all the big analysts. They're not on CNBC. And if I do my homework and understand the company well, I could see if the company's operating well, but just misunderstood at the current time. And when it drops, I could buy shares and then be rewarded. So I like volatility, and this stock chart really shows how the value investor that's actively looking at small caps can really be rewarded. This company also pays high dividends. Even though their stock price is up, it pays a 5.4% dividend. If you calculated the dividend when it was trading at a lower price, it was much higher. So the shares that I bought when it was priced at $5.50 to $6 per share actually have an effective dividend rate much higher than 5.4. So it's been an interesting stock to track, and it's interesting to see the volatility in this stock. So now it's time to make a decision whether I should buy, hold, or sell Pangaea stock. So first, the company is really good. I like the company. I've been following this company for years and really like that they really have specialization, differentiation in the market, which is helping them maintain better rates. And I think the management team's really good. Their debt is less than 3 times EBITDA. I forgot to cover that, but it was one of the ratios that I had on my spreadsheet. But there's no discount on Pangaea right now. So I love the company, but as you saw that the 12-month stock chart, in a month, 2, 3, this stock may be priced differently, may be significantly lower, and I can buy it then. If it goes up even higher to the point where it's priced too high, let's say it went up another 30%, I'd probably sell my shares in Pangaea. And the reason for it is I have to be a value investor to buy and a value investor to sell. And if it goes much higher, I sell. And Pangaea has proven to me that I could buy the stock later on, and it'll probably drop, and then I can buy it then and make money and really take the gains and bank them, and then come back and buy at a price that I think is advantageous to me. So at this time, I'm going to be holding my shares and reanalyzing the company. It's a small cap, so I try to reanalyze companies twice a quarter. And if they're high risk, which I don't think Pangaea is high risk, I actually analyze them once a month just to make sure I'm keeping up with those companies. But this one I'm going to be holding. Thank you for watching the video on Pangaea Logistics. I hope you found it interesting. I'd love to get your comments on the company, on the shipping industry. I would really appreciate that. I'd also appreciate if you can like my video and subscribe to my channel. Thanks again for watching.